Hey guys, what's up? Alec back with the daily stock market. We have a pretty green day in the stock market today and a pretty green 2 weeks overall. So we're starting to see the stock market rotating into a bull cycle. So make sure you are prepared for that bull cycle. With this video, I'm going to help you guys out. We're going to talk about a few different stocks that are still down 40% or more from highs. And Facebook's the first one that we're going to be talking about, down 42% from highs. Okay, it was at $380 per share later last year. So we're going to go over a few different stocks, price points, entries that are down 40% or more and still buy the dip opportunity. With Facebook, if we zoom in a little bit here, we can see that it's making higher lows and higher highs since March 17th, basically. It's in an upward trajectory, actually since like March 14th, when we seen it bottom at about $186 per share. Okay, now under $200 per share, I think it's a load zone for Facebook. But under $220 per share, I think is a very safe place to start loading for long term, especially if you plan on holding for 6 to 12 months. I think there's a good opportunity to be sold above $300 per share. Now, we have a lot of bullish things going on for Facebook, even in the short term. Remember, Instagram at any day now, Mark Zuckerberg basically said very soon it's going to be releasing its own NFT marketplace, which basically can put OpenSea out of business overnight. And you can actually see right here, is Facebook ready to buy a major gaming stock? So that's interesting to think about. Is Facebook ready for a big acquisition? Because we just saw Microsoft spend about $80 billion on Activision Blizzard, okay, which was a huge move for the metaverse. So Facebook's transition into Meta and Mark Zuckerberg's big push into the metaverse, the concept of a shared 3D virtual platform where people can socialize, work, and play, spurred a sector-wide move by tech companies to branch out in other game-like areas. The growing gaming industry has transformed into a $190 billion sector in 2021, far exceeding the combined market size of box office like music industry, according to the market research firm. And I think that's just the tip of the iceberg. I think, the gaming industry can become a $1 trillion industry. It still has potential to 5x, in my opinion. Even before Meta announced its push into the metaverse on October 2021, the social media behemoth has built a presence in the gaming market with acquisition of virtual reality company Oculus in 2014, which is the lead seller in VR headsets to this day. A sharper focus in gaming would encourage Facebook to double down on its investment in the gaming sector, far beyond hardware and building a metaverse. The company, which also owns Instagram and WhatsApp, could soon be building an army of tech talents that specialize in gaming. Meta gobbles up a gaming studio. In the months before it's rebranded into Meta, Facebook went on to an acquisition spree, buying small gaming studios. Among its most recent acquisitions in the gaming space are Studios Ready at Dawn, Unit 2 Games, VR firm Big Box, VR Downpour Interactive, and other gaming studios as well. However, Meta has yet to spend billions of dollars on a gaming company since its acquisition of Oculus in 2014, which is only $2 billion, raising the prospect of potential acquisitions of a larger gaming studio similar to the recent move by Microsoft and the Grand Theft Auto publisher 2Take. All right, and they also obviously got Activision, which we're going to talk about in a second. Multi-billion-dollar gaming deals. 3 multi-billion-dollar gaming deals welcomed the year in January, starting with Take-Two's plans to buy mobile video game company Zynga, which I think is a great deal, for $12 billion, which was also thought to be the gaming industry's biggest acquisition on record, until Microsoft, that is buying Activision Blizzard for $68 billion, and they've obviously done like World of Warcraft, Diablo, Overwatch, Call of Duty, and much, much more. Microsoft said the deal would make it the world's 3rd largest gaming company in the world in terms of revenue, behind Tencent and Sony. 2 weeks later, Sony said it's buying Bungie, the video game developer behind Destiny and Halo franchises, for only $3.6 billion. So that's a move that probably Facebook should have been making. Which gaming studio is Facebook eyeing? With Meta's intentions to promote the metaverse concept, industry watchers are now waiting for the company's next big move. Meta will likely look to gobble up a gaming studio with massive presence in the market, such as France's Ubisoft. Okay, that's a big one. The developer behind Assassin's Creed, Prince of Persia. Ubisoft CEO last month hinted that it's open to offers from companies. Roblox, okay, and Super League Gaming, Playtika Holding are also likely targets if Meta chooses to snap up some bargains of these companies after their shares have tumbled into a near low records. Okay, in June 2021, Meta bought Unit 2 Games, the studio behind Roblox like gaming Crayata. So I would say Roblox is definitely the best bet. If Facebook snatches up a Roblox for like 80 billion or 60 billion, somewhere in that ballpark, that's going to be a game changer. And I think that's a great idea for Facebook. They should 100% do that. The stock will rally huge. It'll probably instantly go to $300 per share if Facebook acquired Roblox. Here you can see the market cap on Roblox is 29 billion. So they can probably get a really good deal. Obviously, they're not going to get it for like 30 billion because it's undervalued. But if they bought it at like the IP price of like $64 per share, that would be closer to like 45 to 50 billion, which would still be cheaper than Activision, which Microsoft paid like 60-70 billion for. So Roblox, I think, is the best thing on their map. They should definitely acquire Roblox. And that leads us right into Roblox. You know, we see Roblox is down 62%. So falling in the category of this video, let's speed it up a little bit. We spent a lot of time on Facebook, so let's go rapid fire through these next few that are down. Okay, so Roblox is one of my favorite stocks that's down 60%. It's hit very hard. Keep in mind, this is mainly a long-term stock. They're not super profitable yet, so it's going to take some time for Roblox to reach profitability. I think in the next 1 to 2 years, and especially in the next 3 years, Roblox can continue to be one of the largest video games in the world. Remember, they have one of the most daily active users and are growing phenomenally. So as long as they just keep that up and that growth rate high, I think Roblox is going to knock it out of the park in the next 2 years. We can see them pass new all-time highs, which would be around a 2 to 3x gain on Roblox if they don't get acquired by Facebook. If they do get acquired by Facebook, that would be more reason that you would want to own some Roblox. Personally, if I can get in under $40 per share, that's the sweet spot. And if we see them around $35 per share once again, I'm definitely going to be loading up at that point. But I am excited to see if Facebook does acquire Roblox. Okay, going over some of the best deals in the market at the current price that are down 40% or more. Here we have PayPal next on the list, and they're down 60%, so a lot more than 40%. And remember, they were even as low as like $98 per share at one point. They've risen about 15% since then. So if you can get in closer to $100 per share, that's where I'm personally looking at. And I'm looking to sell above $200 per share, which would be about 100% gain in the next 6 to 12 months, in my opinion. That's one of my favorite trades in the stock market right now. PayPal, closer to 100 and selling above 200, or even holding for long term, because I think once PayPal gets more integration with Bitcoin and Ethereum and cryptocurrencies as a whole, I think they're going to continue to skyrocket, and they've had great revenue growth, great net income over these past years too. So there's really no justified reason for PayPal to take a 60% dip down and go to like 2018 lows. So I'm personally taking advantage of that, and we're going to be doing a deep dive into PayPal soon here on the channel. We've already done one just, I think, a couple weeks ago, but we are going to be doing an update at these more current prices. So make sure you're subscribed and ring that bell so you don't miss out on any of those videos. And the next stock up is going to be Mr. Netflix here, and you can see that they are down significantly from their highs, down around 45% still to this day. And they were down even like 52% at one point also. So Netflix is still at a 52-week low. There's still lots of opportunity to buy. And you can actually see that at $375 per share, they were that low basically in 2018. So a lot of these stocks that we're talking about in this video are at 2018 lows, and they haven't been this price since 2018. So we saw huge growth from Netflix over the last few years, over the last 2 years. We've seen their net income increase. We've seen their revenue increase. So let's actually take a look at their income statement here. Since 2018, they only did 1.1 billion in net income. And then if you fast forward to 2021, now they're doing 4.8 billion in net income. So you'll be very hard pressed to find a company that has been growing 85%, 47%, 53%, 81% year over year over year, not missing a year, not having an off year, and they're at 2018 lows. We also see they're a revenue monster. They're growing revenues by double digits. This is stuff that Warren Buffett looks for, and this is how he trades, looking for at income statements and balance sheets and seeing companies that have a compatible, durable advantage in the stock market, which Netflix, obviously, they're the household name when it comes to streaming. They're the top dog when it comes to streaming. They're upping their game every single time. They're putting out bangers, Squid Games, all these true crimes they're coming out with. And the list goes on and on. You can think of so many examples for Netflix for a compatible, durable advantage in the stock market. With that being said, we go over to total revenue and look at that. Growing 20, 30% every single year consistently without an off year. So these are things that are hard to find on companies, great fundamentals. And if we go over to their debts to assets on their balance sheet, it is a little bit high, 64%. Typically, I like to see that under 50% and closer to 30% for the debts to assets. So on a deep dive, for example, I would go into their balance sheet and look where they're hemorrhaging their money at. What's going on with their cash and cash equivalents, see what's going on with their research and development. But obviously we know that Netflix is putting a lot of money into production. Some of these videos, like Red Notice, for example, they spent $100 million. They had The Rock, they had Ryan Reynolds, and Wonder Woman was in that video, in that movie also. So it takes a lot of money to do things like that. $100 million is a huge budget for a movie. That's basically like a blockbuster movie. If you're going out to the theaters, it's basically on the same level and the same scale. And that video actually made a return on their investment. So when they see they spent $100 million on a movie and it makes them a return on their investment, they're more inclined to keep doing this and keep growing down the line. So needless to say, their net income has almost 4x. Their revenue has doubled to triple over since 2018, and they're still at that $370 per share price. I think Netflix can be $500 per share in the next 6 to 12 months, maybe even higher. And in the next 12 to 24 months, I think we can see Netflix at new all-time highs again. Especially if they keep growing their net income like they have and their revenue, there's no way that this one will be lower than it is today, 2 years from now, if they keep up what they're doing. So guys, I hope you really appreciate that video, me taking my time to come on here and help you guys out with the best stocks in the market that are down 40% or more. If you appreciate videos like this, just smash a thumbs up button. That's all I ask, and I'll keep making these videos for you guys. Comment below what you guys want to see next. And if you want to get on my close friends list, now is an excellent time to become serious about the stock market and get some help with investing. All these green ones that say the close friends list, those are for close friends list people only. If you want to see success that people have had, click on success number 4 and go to some of the more recent ones. Okay. And you can also go back to success number 3, success number 2. We've been doing this for over 2 years now, helping people understand the stock market, helping beginners to get to a more advanced level in the stock market, and more importantly, making a return on your investment and making money in the stock market as well. So if you guys want to see what that's all about, go ahead and message me on Instagram. I'll send you over a survey so I can help you out the best way possible. And then after that, I'll shoot you over my website so you can see what it costs, what all the details, what you're going to be learning, and everything in between. And if it makes sense to you and it's inside your budget, love to help you go ahead and get started today with some discounts that I have going on not much longer, because when the stock market starts to heat up, we typically see everybody want to sign up all at once, and that's when I typically have to raise the prices. So if you want the early bird discount right now, I have that going on. Message me on Instagram. I'll help you out with that. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.